Nvidia just announced their preliminary earnings results for their upcoming quarter, and unfortunately things don't look good for the company. Fortunately, if you are a subscriber to this channel and you saw my previous Nvidia video, we actually talked about a lot of these points in the last video. But we can see right now Nvidia stock is down roughly 4.4% as the stock released those preliminary results, but we can see in the past 5 days it's pretty much flat. In the past month the stock is up roughly 14.5%. So even though the preliminary results are bad, I do want to say the kind of price action we're seeing right now, it does show that hey, the market was still expecting somewhat bad earnings, because to be honest, I would have expected the stock price to drop a lot more if this company was kind of priced to perfection. All right, so let's take a closer look at the preliminary results right now.
I do want to thank the Motley Fool for sponsoring this video, and make sure to check out fool.com/Jose to get the top 10 stocks to buy right now.
So there are 4 things here that I think investors should really keep an eye out. First is the preliminary results versus the guidance that they gave a quarter ago. Second thing is the gaming market and how much of a decline it is seeing. The third thing is what's affecting the data center market. Finally, their automotive market. So if we take a closer look, preliminary second quarter revenue was $6.7 billion versus the outlook of $8.1 billion. So again, even though the results are better compared to a year ago, because it's such a huge difference from the outlook, I would have expected the stock price to be down a lot more. And that 6.7 billion would be down 19% sequentially, but up 3% from a year ago. They do mention the biggest reason is the gaming revenue, which was roughly $2.04 billion, down 44% sequentially and down 33% from prior year. And I want to say this gaming revenue market decline is not unexpected. We did hear from AMD last week that the graphics market was seeing a huge decline. We also saw from Intel that the consumer market and the overall PC shipment market was seeing a strong decline as well. So putting those two together, I don't believe many were expecting the gaming revenue to be up any. Many were expecting it to be down. And if you are liking this video, make sure to hit the thumbs up. It does help me grow my audience and supports the channel so much. If you want to support a little bit more, make sure to subscribe using my link, fool.com/Jose. Unfortunately, their data center revenue, even though was a record, it still did short to the company's expectations as it was impacted by supply chain disruptions. For example, their data center market was up 1% quarter over quarter and 61% year over year. And again, this is something we took a look at in the previous video, where we saw that AMD still shows strong demand for the data center market, and we can see that with that up 61% year over year growth. We did hear from Intel, if you are a market share leader, you are going to get hit with either supply chain issues or a form of inventory correction. And we can see in the data center for Nvidia, that was the case. It did see that growth that AMD was seeing, but because it is the market share leader, it also saw that kind of slowdown in the overall data center market due to supply chain issues and kind of inventory correction, which caused the company to miss their guidance for data center, even though it was up 61% year over year. The company also saw a huge decline in gross margins. 46.1% this quarter is expected versus the 67.1% it previously had expected. The huge reason the company saw a huge decline in margins is because they had long-term purchase agreements made during that kind of the chip shortage that we saw before. And even though things are slowing down a bit, they still have those agreements, so they have to keep up with them, causing margins to decline. The company does say that they believe their long-term gross margin profile is still intact, and they plan to continue to buy back stocks as they foresee strong cash generation in the future. I want to finish off with the automotive market up 59% quarter over quarter and 45% year over year. Like we mentioned before, the automotive market is super small, but it's one that I believe will continue to grow at strong double digits for many quarters from now until it becomes a nice valuable asset in the company's revenue segment. Overall, as a long-term investor, I am not worried at all. I am not selling any shares, as I did believe that in the short term it was going to be very volatile for Nvidia, but in the long term things are still looking great.